Welcome to the Inspire to Invest podcast, where we're sharing inspiring stories from business owners, entrepreneurs, and real estate investors on the pursuit of wealth and financial freedom. This episode of the Inspire to Invest podcast has been brought to you by the Wealth Club. Hey everybody, welcome to Inspire to Invest. I have Denis Shapiro here with us from Freehold, New Jersey. He began investing in real estate in 2012, just as the market was beginning to recover from the global financial crisis. He built a cash flowing portfolio, including many alternative assets, such as mobile home parks, life insurance policies, tech startups, industrial property, short-term rentals, affordable housing communities, and more. It feels like you kind of cover all of it. He co-founded an investment club for accredited investors in 2019, and following the success of this club, he launched Strategic Investment Holdings Capital Group. He also wrote a book called The Alternative Investment Almanac, Expert Insights on Building Personal Wealth in Non-Traditional Ways, back in 2021. And this is based on his experience becoming a successful alternative asset investor. So thank you for being with us today. How are you?
Thank you so much for having me on. It's a pleasure to be here.
So it sounds like you've definitely covered a lot of ground in the last 10 to 12 years. So maybe you can take us back to where things started and how you got introduced to this concept of alternative asset investing.
So I got started pretty early on in my investing career. I first started doing traditional investments. I had a part-time job when I was like 14 years old. You're not really doing many alternative investments at that stage. So I went down at that point, those, I can't believe 20 years ago, where, I was buying mutual funds. I was actually trading, and I kind of thought that there might have been a better way of doing things. The first thing that I realized is by putting your money in the hands of a mutual fund, you kind of take away any potential responsibility for your own capital. And I went down this rabbit hole where I wanted to be like the next Warren Buffett, went to business school for it. However, right when I right when I was in my junior year, the global financial crisis happened. It became really, really hard to get anywhere. And I was in smack in the middle of New York City while this was happening.
Yeah.
Ended up working for the government. I had a pretty successful 12-year career with working for the government. But pretty early on with the government, I realized that they weren't only my employer, they were also my business partner with the amount of taxes they were taking out. I had no kids at the time, so basically no write-offs.
Yeah.
Went online. I was like, well, how do I reduce my taxes? And kind of stumbled onto the whole Bigger Pockets world. Bought my first single family rental, then quickly realized this is not really what I want to do. I was kind of the project manager, I was the project manager, I was the manager on site, I was a construction manager. I kind of wore all hats
Yeah.
while working a full-time job. I realized I didn't want to scale that. And then I kind of got introduced. I think I was listening to a Bigger Pockets podcast, and I got introduced to, a private placement memorandum and investing in an alternative asset. And at that point, I had enough money to do so. I went down that rabbit hole, and then that kind of got me into the first investment I did was a note investment. Then I kind of stumbled into apartment building investment, and that's when it was like it was the holy grail for me. It was like, wow, I could buy 1% of a large apartment building. So I did that for a little while, doing my own deals where I was investing in other people's properties. Basically not recruited, but I kind of told two other people what I was doing, and that's when we
Yeah.
did that investment club. And then we ended up doing 10 or 12 limited partnership deals that year. And then from there, we kind of took steps to get back on the operational side. So it's funny when you say it in 30 seconds, it sounds like it's just bam, 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 but there was just a lot between.
Yeah, it's
And
all part of the
one of those,
progression.
yeah.
Now for us in Canada, I'm not familiar with the concept of note investing. Can you elaborate a little bit on exactly what that is and how it works?
Yeah, so a note investment is basically where a private equity company will buy, usually from a bank or a third party, where they'll buy a bunch of loans that have gone bad for one reason or another. Usually
Okay.
they're mortgages on a property.
Okay.
So this company went out, they would buy, let's say, $200-300 million worth of loans that weren't performing. They would spend time, effort to get them re-performing, and then they would give a certain amount of returns to their investors,
Okay.
and then they would sell off those loans when they got them back to being
So
performing.
is that the equivalent of buying the debt? Someone had talked to me about that
That's exactly what
recently.
it is. Yep.
Okay, yeah. I have that book saved in my Amazon shopping cart. So. Okay, so from there, obviously you've kind of taken things to the next level and you went full force into it. So at what point did you leave your government job to go ahead with all of this?
It was in 2022.
Okay.
Uh, at that time, we had a couple of multifamily properties, and I felt like I had one foot in and one foot out.
Yeah.
The main difference was I was working with people that I wanted to work with. There was no with the government, unfortunately, you don't choose
You sure
anything,
don't.
frankly. No, it is what it is.
Yeah.
And I didn't mind that when I was young. But then it got to a point where I didn't want to work with incompetence, and I appreciated working with competence. And then that was the big aha moment. It
Yeah.
wasn't like I had anything against working for the government. It's just I had problems with working with people I didn't want to work with at this stage of my life.
Yeah.
And I think you got to cut your teeth. You got to go through it to realize and appreciate partnerships but you can't go through it without going through like really bad times
Yeah.
where you're being micromanaged and just told what to do, and you kind of know differently, like, hey, I've been here for 12 years, I know
Yeah.
exactly what needs to be done, but you're not letting me do the job.
Yeah.
So when I transitioned out of the government in 2022, and then honestly, it's like what all the cliches that people say is like, well, I should have done it sooner. Part of me, I was like, yeah, I should have done it sooner. But we've been growing exponentially the last 2 years. So it's like, all right, what would have gotten me if I did it a year sooner or 6 months sooner? It would have been
Yeah.
great to say it, but I love the trajectory that we're at, and it's
Yeah.
because it's slow, it's steady, and it's continual.
Yeah, and I mean, it's kind of like the quote, you grow through what you go through. So I think sometimes, even if that could have been possible, maybe you just didn't have enough life experience or just being exposed to different concepts to really decide what you wanted. And maybe it could have gone a different way had you started that 10 years sooner. Like you'll just never know that. And I don't think you can go back and can't change it. So all you can do is like take what you've learned from at this point. How have you found adapting to life as an entrepreneur? Because obviously now you're not in a set schedule. And I find that everyone adapts to that differently. Like sometimes people be like, oh, I don't have to go to work. So I'll roll down at 12 o'clock to get my day started. And then there's other people that are like, well, now I'm working 14 hours a day instead of 8 hours a day. So, how have you found that transition?
So from first off, I have three small kids. So from a work-life balance, it's amazing. Like this whole
Yeah.
summer, we didn't need a babysitter.
Yeah.
It was terrible for my work performance, but it was amazing
Yeah.
for my family life. The other thing is, I find that it's interesting is when you work a 9 to 5, there's really no rhyme or reason why you work a specific 9 to 5, right?
Yeah.
It's just the government can't manage too many different schedules at the same time, whatever
Yeah.
it is. But the truth is, people work at different paces, different schedules. Like I have one of my partners, he like pumps out emails at 1 in the morning. I don't understand how he does it. I like to wake up at 6 in the morning and I like to respond,
Yeah.
but I wake up and sometimes it's annoying because I like to go to sleep sometimes with an email box that's like empty, and then
Yeah.
I'll
I'm
wake
the
up
exact
and
same
I'll be
way.
like cursing him out.
Yeah.
Um,
Yeah. I'm the same. I'm laughing because when I had my own business, I used to, work was busy. I'd wake up crazy early in the morning, like 4 in the morning. People be like, why are you emailing me at 4:30 in the morning? And then just the same thing, like with your inbox, to me, it's kind of like anything that's there needs to be dealt with. Anything else is kind of like organized and filed, or like, it's kind of done in a certain way, but it keeps me organized. So everyone is different, but there's people that have like 11,000 emails in their inbox, and I'm like, my head would explode. So it just depends.
like one of my things that I've realized working by myself is that there is a lot of strategy involved on how you actually work.
Yeah.
So being surrounded by other entrepreneurs, like I get bits and pieces. Like I was the guy that had 11,000 emails before. And
Yeah.
then one of the people in my network who's also a real estate operator, he's like super into productivity and efficiency.
Yeah.
And he's like, Dennis, I can't see like when you screen share, I vomit because I see the 11,000 emails. I'm like, I'm gonna clean your email box out. And he spent like an hour or two like consulting, like just like walking me through here. This is how you do, forwarding, and
Yeah.
this way it's in the right places. This is how you start it, and then from here you bring it into your project management software. And I'm like, oh, okay. I was like, this is how you do it.
Yeah.
So working with like high level entrepreneurs, you actually put a lot of rhyme and reason of why you work a certain way.
Yeah.
And now I'm at the point where we've had a lot of acquisitions the last 2, 3 years. We've built out our own property management companies. Now I'm at the point like 9:30 in the morning, like when my kids are off on the bus, like 9:30 in the morning is like my health gym time. Like I don't have one meeting scheduled until 11 o'clock
Yeah.
because that hour and a half is like my personal time. Like I can't imagine that in a
Yeah.
world where that would ever fly for the government would be like,
Yeah.
hey, I'm gonna,
Yeah.
I'm gonna come in. I'm gonna take care of a couple of things. I'm gonna get the main things out of my way, but then I'm leaving the office for 2 hours because I
Yeah.
need a little me time.
Yeah.
Yeah.
Yeah. Yeah. And that's just it though, right? I mean, I do understand in some capacities, like there are times that like at least you know what other times everybody's working at and stuff like that. So I can understand why it's like that. But I mean, once you have a family and your priorities shift and stuff like that, I don't think it's reasonable for most people. And maybe we're spoiled now because of COVID and, remote work and stuff like that, because we know we can like put our kids to bed and then work for another hour in the evening if we have to. But I think you just have to decide what kind of lifestyle you want and, what kind of life you want to be leading. Now, in terms of your successes to date, so you mentioned you obviously had all these acquisitions and stuff like that. What would you say you're most proud of based on everything you've accomplished in the last 10 to 12 years?
Just surrounding myself with certain partners. A lot of my partners ended up having very similar demographics as me, where we're all in our 30s and 40s. We've all were successful in our previous career. We all have young kids, and like our name and reputation means a ton to us. And because of that, we've done some amazing projects, which I would never like. You don't realize, like, when I worked for the government, I was like a superstar employee, but I was surrounded by people who probably many of them would not make it in the private world for one reason or another,
Yeah.
right? So I was like a really big fish in a small pond. And then now I work with a bunch of superstars, and I'm amazed at all the deficiencies I have, and it's just amazing working with them. So I have we have two core niches. One is hospitality and one is affordable housing, and they couldn't be more opposite. But on the hospitality side, we have one partner who runs almost every farmer's market in the state of New Jersey.
Oh,
And he's a branding whiz. And I have zero experience with branding, marketing, any of that. So I work for the government. It's
yeah.
as unbranding and marketing as you can get. And we created this boutique like hospitality company where we have beach bungalows, and it's such a great, like, I walk there and I'm like so proud of this. I'm like, this is amazing. But it would never happen without people like Brett. And
Yeah.
then on the affordable housing side, I have someone like Anthony and John who have 15 years of property management experience, and
Oh,
their number one goal is to provide a safe, great environment for people to live in that's affordable.
yeah.
So I've created amazing overall projects because I work with like really amazing people that I by myself I wouldn't be able to do any of it.
Yeah. Yeah. No, that makes perfect sense. Now, obviously, when you started, it was when the world was kind of coming out of these challenging times. And then, come full circle, COVID has presented some challenges with like interest rates and the housing market on a downturn and stuff like that. What would you say are some of the biggest obstacles that you've faced?
I think figuring out how to actually acquire. I think there's just a lot of different misconceptions, and some people go the route where, hey, I got to reach out to 1,000 brokers and just talk to as many realtors as possible, whatever it is, or
Yeah.
hey, I'm looking at deals in Alabama today and a different state another day. I
Yeah.
think what I realized is my superpower has been this network of other operators that I've built around me. And
Yeah.
I realized I don't actually have to ever focus on going out there and talking to a broker. Just let the people who I know, like we have someone in our circle who does mobile home parks, and they're amazing at mobile home parks. They'll bring me one mobile home park deal a year. And then I have a self-storage guy. And then my affordable housing, we kind of have a partnership with a brokerage firm. So it's not spending time on cold calling a random broker, but instead just fostering really strategic relationships around you. And you only need a handful of them,
Yeah.
and you can get anything you want to accomplish. You could accomplish anything you want at that point.
Yeah. Yeah, no, that's perfect. Now, in terms of lessons and stuff like that, what would you say is maybe like one of the biggest lessons that you have learned from? And is there anything that maybe, based on what you know now that you could have done differently?
Yeah, my number one lesson really is investing in other people that I didn't have significant relationships with. We kind of coined this term relationship-driven investments, and we invest with a small group of operators, and we have really intense relationships with some of our investors where we get on calls quarterly and just let them know what's going on, what's happening, everything like that, which I think is counter to the common, market to millions of possible investors, and hopefully one or two of them end up investing. So we really try to focus on the relationships. We've invested in two Ponzi schemes, and in both cases, we had no relationship with the operator. We kind of got blinded by the terms. So there's never a perfect investment. However, if you have a really solid relationship and you can tell me, you invested with operator A, you could tell me how many kids does the operator A have? Is he religious? Is he not religious? Does he drive a flashy car? Does he live beyond his means? If you could answer like 20, 30 really high level questions about that specific operator, I'll tell you if your deal is going to go well or not. And it has nothing to do with the deal.
Yeah, well, I mean, I think that there's something to be said on both respects. Like even in my communities, there's a couple of really significant situations that have affected hundreds of investors. And a big thing is just, again, I think there's elements of misrepresentation and fraud and stuff. So like, you'd really have to dig deep to even really get a true sense of that, right? So I think it really shed light on like, don't be afraid to ask for financials and always get maybe even like two opinions from like a lawyer and stuff like that, right? Because there's something that one lawyer might catch that somebody else wouldn't necessarily catch. And in this instance, instead of raising money for down payments and stuff like that the right way, so with like limited partnerships or joint ventures and equity, they were raising them all on P notes. So there was just such a significant amount of debt to the equity. And then in other instances, there was, I think there was like 19 or 20 P notes on one property, for example. So the property is only worth 400,000. There's like $1 million in P notes. Like, everyone thought you're the only one P note because it's being used to renovate this property and refinance it. And we all kind of understand the BRRRR strategy and how that's going to work. But we didn't know there's all these elements of fraud happening in the background with a company that had been around for, in one instance for 10 years and had, hundreds of 5-star reviews. And, it's just something that nobody could have expected. But I think, if you think you've done enough due diligence, like there's always more. So just you'll come up with your own systems and find ways to protect yourself. But yeah, there's been lots of lessons, I think, in this last couple of years in particular. But on that note, we're just going to take a really brief break from our sponsors, and we'll be right back.
Welcome to the Wealth Club, an exclusive community dedicated to elevating your journey towards financial freedom, well-being, and success. The journey to 1% starts here. Join like-minded leaders and commit to growth for the mind, body, bankroll, and soul. Learn all the proven techniques to change your life forever with direct access to a massive team of more than 10 tried and true experts. Moreover, members enjoy priority access to investment opportunities, job openings, and partnerships within the community. For just $1 a day, members gain entry to specialized forums covering a wide spectrum of fields, discover diverse income streams, new opportunities, collaborations, and employment. Partake in weekly Zoom calls with our team and join monthly live Q&A sessions. Compete and win cash prizes. Active members top the leaderboard for monthly rewards. Ready to get started? Join today to unlock your true potential. To sign up, go to scroll.com/The Wealth Club.
Thanks again for following along with this episode of Inspired to Invest. In addition to real estate, investing, and running my own brand experience agency for 18 years, I also published a book called The Accidental Entrepreneur in October of 2021. This is my story, and it chronicles how I turned tragedy into triumph to embrace my destiny in entrepreneurship. If you're interested in picking up a copy, you can find the link at serenahomesrealtor.com, and you can also find my link tree with all of the retailers in the details below. Thanks again for your support.
Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations.
Hey everybody, welcome back to Inspire to Invest. I have Denis Shapiro here with me, and we're talking about how he's grown his business over the last 12 years. We're talking about everything from successes and obstacles to lessons. But next, I kind of want to know, what's the craziest thing that you've ever experienced as a real estate investor so far?
Craziest thing. Okay, so this is actually when I bought my second house, technically, was a house hack, and it was a two-family. The house was over 100 years old, but it was a nice brick house, like one of my favorite houses ever. It was actually kind of painful to sell it like 2 years ago. But we moved in October, and then like 2 weeks later, so we rented up upstairs, and then downstairs we lived in the smaller apartment. And 2 weeks in, we realized that the sewer line was completely busted, and this was
Mm,
kind of inexperience. Um, so it was fine. We didn't really think of it too much because there was only two of us downstairs and no one
yeah.
upstairs at the time because no one rented up upstairs yet. And then we decided to do like a housewarming party in December. And what ended up happening was there was a snowstorm that came in and the temperatures dropped like overnight.
Yeah.
And I think we did this like New Year's. And so I just remember there's 30, 40 people in the apartment. And I get a knock on the door and they're like, "Hey, there's you have ice on your sidewalk." So we go out and it's not actually ice. It's actually frozen sewer because
Oh, poo ice.
it's frozen
Oh
pool
no.
ice. And so I go get a shovel and I break it out. But every time someone flushed,
Oh, Happy New
it came,
Year.
it came back out.
Ah,
So
that's
I had a house
awful.
full of like 30 people and they're just going into the bathroom. And
Oh,
all I'm like thinking, I was like, this is like I literally put all my money into this house. And like I see like a couple of people stumbling around, like New Year's drunk. I'm like, someone's gonna fall and just take my house like tomorrow. And
yeah.
I was out there till like 3 in the morning, basically shoveling
Oh.
dog poop ice. Yeah, so that was a
So
great
it was all outside the house, so nothing backed up inside.
nothing back down inside. No, the crack was right before the main line.
So it
So
could
it's
have
like
been worse.
it could have been worse, but where it cracked, it was going onto the sidewalk.
Yeah.
So we ended it was a long story, but it was just, always get a sewer line inspection when you
Yeah.
buy
Yeah.
a
I
house.
mean, there's so many things, right, that you never even know. Like I have friends that bought a house and they had clay piping and a tree branch, I guess,
Yep.
through it. So I think they were only in the house like 2 days and like the whole sewer like backed up into their basement. So yeah, it was just happens. So yeah, you can never skimp on anything like that. Now you obviously mentioned that you're part of this investing club. You've connected with a lot of big players in the industry. What would you say is some of the best advice that has been given to you?
So we're not like the biggest by any shape or forms, but we are very, very authentic of what we do.
Yeah.
We're not out there on social media saying, how many assets under management we have, how many doors we have.
Yours. Yeah. You're like everybody
Yeah,
wants the number
like
door
you're
they
like,
have.
what does that mean? Like, hey, I'm an LP in a
I
10,000
don't know. It's like
unit.
an ego thing. I don't know.
Yeah, it drives me freaking nuts. Like it absolutely it really does. So I think just being authentic, just really connecting. We ended up, I'll tell you a story. The first person I ever did my first syndication with, and this was in 2012, I want to say. Um, his company has grown to like they're approaching $1 billion in assets under management.
Yeah.
And 12 years ago, I literally was just an investor. And then about 2 years ago, I asked him like, "Hey, I have this group of other operators. Would you mind?" And it's in his backyard. I was like, "Would you mind just coming once a month and just, you know, helping us out, like almost mentoring us out. We're all doing deals, we're all doing blah blah blah." He started coming, and literally, he's here, we're down here, where we're at versus where he's at, and just keeps coming. And then if I talk to him and why, it's because we're not trying to do something that we're not. Like we're just trying to be super humble. We're super grateful that he's coming out. So throughout my career, especially like the last 2, 3 years as it really has taken off, like there's been 3 or 4 people like that are just me realizing that they are way higher level than I am.
Yeah.
B, being super appreciative of their time, and then just figuring out like how to provide value. Like,
Yeah.
so how is a group like that, can they provide value to him, not just the other way around?
Yeah.
So those are like the type of things that you gotta have in the back of your mind. It cannot be like a you situation, but at the same time, don't be scared of networking with other high level people because that's the only way you're gonna get to that area.
Yeah, no, I completely understand. I've been part of a mastermind for the last 2 years. So Beardy Brandon was one of our expert speakers, for example, from Bigger Pockets. And, they have an expert speaker once a month. And then when they have their events, which there's 3 a year, they'll bring out a number of speakers, but they don't just come and present for an hour. Like they'll actually stay with us all weekend. So all the meals and all the events and stuff like that, we're there and we can connect with them. Like we can reach out to them kind of outside of the events because now we've gotten to know them and stuff like that. So there's a lot of resources and strategies that they'll help you see that you just otherwise wouldn't have known about, right? Just to get you where you want to go faster. So I couldn't agree more. Now, obviously, your focus has really turned to this full time in the last 2 years. Do you have an idea of exactly where you want to take it and what your, like what your financial freedom goals would look like?
The funny part is technically I retired multiple times in terms of like financial freedom in my life. When I only had one kid, it was a lot easier, and then a second kid, and then moving to a higher cost area.
Yeah,
Um, Kind of, hey, back to work for another year or two. So it was never really about money on the real estate side. There was just always this question about like, what do I do next after the government?
yeah,
And I just, what I, and the funny part is I had an MBA in 12 years ago, but never used it. So I worked for the government because of the global financial crisis, had this MBA, and never got to really use it ever. And then now I got involved in these real estate projects, and I realized like every single real estate project is like its own unique business. Like it
yeah,
has, I love coming up with the business plan. I love strategizing. I love structuring the deal. It's like one of my favorite things. Like, hey, I got a good group of people around me. Like, how do we make this a win-win situation for everybody? And like, I challenge myself on creating the maximum win for everybody.
yeah,
So those are the things that I genuinely like love to do. I'd almost do it for free if if it was possible, but I think it would lose some incentive. But it's really something that I come to really enjoy. So
yeah,
long term, and this is something that I talked to my partner about where we started really strategizing what the next 5 years in. And we've accomplished a lot of stuff where we've created 2 management companies, one for the hospitality side, one for the affordable housing side. We're over 200 units at this point in a few years. But more importantly, we have over 96% occupancy on those units. We're way more proud of that than the number of units that we actually have.
yeah,
Uh, so those are the things that we kind of pride ourselves in. So like, where is our next 5 years? How does it actually look like? And what we've realized is like we only need a certain amount of property. So our goal is to get to 8 properties on the affordable housing side, 8 properties on the hospitality side,
yeah,
and then but operate them in the high 90s efficiency because we found that we can do more with less if we just focus on a few properties but give it our undivided attention. We have also learned from being investors in projects that didn't go well. It's like, well, why didn't it go well? Well, they got stretched on the asset management side. They didn't bring in anybody, blah, blah, blah. So we
yeah,
do things like we just went to a new state, and instead of trying to figure out how to make it work with the current structure, we brought in a general partner just for that state. So
yeah,
his only responsibility will be that state's
yeah,
portfolio. So
yeah,
those are the things that we've kind of learned. So yeah, very humble. We don't have a unit size. We do have a certain amount of deals that we do want to get done. And then it's gonna be a long reflection in the mirror in 2028 and say like, hey, do we want to add on more GPs? Do we want to add on more properties? Do we just
yeah.
focus in on the current properties? And then we'll have that moment of truth in 2028.
Yeah. Yeah. I mean, I think that's something that I've seen a lot of in this last year with companies that have gone into bankruptcy or insolvency protection and stuff like that, is that they scaled so fast and then they ended up in these situations where they had like 30% vacancies. And it's like, well, why? Like, why would you bought, say, like 20 properties, made sure they're done, refinance them properly, then buy your next 20, or like do it a certain way that makes sense, as opposed to like buying 600 plus properties in 6 years and they're like almost half vacant. So, well, it's no surprise you went into, insolvency protection, right? So it just blows my mind that people wouldn't think of the bigger picture. And to your point about, making sure that everybody's happy and there was those, it's mutually beneficial and everybody wins. Like that is how you, I think, win in the long run, right? Like you have to make sure that you're delivering what you projected. And yes, there could be things that happen like interest rates, there could be market downturns, but I think if your goal is to make sure that you've got that 96+% occupancy, like I think, you're going to be successful and you can weather the storm if you handle things appropriately, right?
Yeah, and I think to add on to that, it's the what is the financing in these deals,
Yeah.
right? So many of these deals, when I got started heavily into the limited partnership side, so many of these deals were billed as, oh, we're probably going to refi in 2, 3 years and you'll get your money back and you'll still own the piece of the deal. And that was really attractive when I
Yeah.
was working for the government. That never happened. Not one deal that was bought in 2018, at
Yeah.
least that I invested in. All of them had a moment of truth and they were able to sell for a 25, 30% IRR. And they went all over social media saying how great of a return it was. However, I was like, I'm getting a huge tax bill in November of 2020, blah, blah, blah. I'm like,
Yeah.
this is
You're like,
not
I
great
wasn't
at all.
intending to cash out.
Yeah, and
Yeah.
all of it's because of the way they structured the
Yeah.
financing and all of this stuff because they fell behind on the pref, and that was the only way too. So what we realized when we got on more on the operational side is like, well, what is everything we don't like about how the current syndication? Like, can we remove the marketing from this business? Because like there's marketing and marketing is a necessary evil. But when you can't distinguish a good operator because they're a good marketer, that there's a problem with that.
Yeah. Yeah.
So can we remove the marketing? Can we increase the value we place on relationships? Can we do that? Can we increase the hold periods
Yeah.
where we don't have a huge team of 20, 30 salaried employees? So we don't need to sell every 2 to 3 years or
Yeah.
whatever it
Yeah.
is. Can we buy a handful of great assets and then really actually treat your investors with respect that they deserve? And that requires more timely communication. Like that requires that, like, hey, after you wire the money, we still care about you.
Yeah.
And
Yeah.
so, like, let's get on a call next month or in 2 months. Let me figure out what's going on. It's not that you just wired your money on this deal. So those are like the things that we identified were like, hey, these are big issues. And because of that, we only do fixed financing. It's
Yeah.
really rare for us to do that. And other people, they're like, well, we have to do a deal. The only way it pencils out is a variable loan. Well, great. What happened the last 2 years? How many of those deals now have foreclosed on or is in legal proceedings or everything like that? So
Yeah.
we've learned from other people's mistakes. We've learned from our own LP deals that we've done. We've learned from
Yeah.
joint ventures that we've done. And now we kind of have this mission creed ourselves, be like, hey, this is everything that we thought was wrong with the space. This is how we're doing it
Yeah.
differently. It
Yeah.
doesn't attract every investor because we only model out 13 to 15% returns. So
Yeah.
it's still hard because I go on Facebook now and I'm seeing a slew of deals that are over 20%. And I'm like, all right. But they're all operators that just came in 6 months ago.
Yeah.
And you're
Yeah.
like,
Yeah,
okay.
I had a podcast I recorded with someone here that he's Canadian, but he does a lot of stuff in Houston. And he's like, don't talk about return on investment until you return my investment. It's like it makes sense because everyone's really attracted to these deals that are, these explosive numbers. And then the reality is, well, will they be successful in the long run, right? And do they have a leg to stand on? With regards to your affordable housing, are those like Section 8 type housing? Like someone had mentioned that to me, but again, I'm not American. So I was just curious if that's what you're referring to.
So we do Section 8, but we also do what's called LIHTC properties. So the
Okay.
American government actually provides tax incentive credits to developers to build brand new affordable housing.
Okay.
But when they give these credits, they put two 15-year restriction periods on it.
Yeah.
So the first 15-year period, it's usually they hold on to it. There's tons of incentives. The second
Right.
15-year period, you'll see a lot of these go to market. Now,
Yeah.
these are usually there's some big you got the CBREs, you got some of the Marcus Millichips, you got the bigger things, but then there are some there are more niche brokerages that just focus on affordable housing. The
Yeah.
best part about affordable housing, honestly, you go to a boot camp, a mastermind, a retreat, no one's talking about affordable housing at scale. So
Yeah.
we usually like this is not like a one-off. We buy whole affordable housing communities. We
Yeah.
usually buy them in that second 15-year restriction period, and then we'll take them out of the restriction period, and then we have a choice to either renew those credits or turn around and take it to
Yeah.
market at that time.
Yeah, I'm sure it's not quite exactly the same, but we've got a product here called MLI Select, which is through CMHC. So essentially, it's a 50-year amortization, and then you can come in at 5% down. So obviously, that's really attractive when you're buying these really large commercial properties and stuff like that. I think one of the challenges that our investors have had here is that they just keep on changing the rules with no notice. So there was this 1 point system in place and it had that, then they changed some stuff. There was some stuff for energy efficiency. So imagine you're building something specifically for the energy efficiency and then they just change it with no notice, and then all of a sudden the projects may not be valuable and stuff like that, right? So I think we're just trying to jump through a lot of those hoops right now, but I always find it interesting just to see how things are different south of the border.
For what it's worth,
Sorry, go ahead.
I was like, for what it's worth, it's been pretty consistent with LIHTC credits. There are other state incentives that go onto it, and those kind of change
Yeah,
more frequently. But for the most part, it's actually considered pretty
federal stuff is the
successful.
same. That's good.
Yeah.
Yeah, well, at least it helps make your plans work. Seen a lot of people just really struggling with that. Now, just in terms of wrapping up, obviously the name of this podcast is Inspire to Invest. So I always like to ask people, what's a quote that motivates or inspires them?
A quote that motivates, that's a good one. You know, I'm gonna switch it up a little bit. I'm gonna say this was something that it's more of an adage when it comes to networking that I think stuck with me and I think is a great piece of advice is when you're going out there to network with three people directly above you and three people directly below you. Make sure you can help those three people below you get to where you're at today, and then work with the three people above you. Too many people will go, well, I'm worth, $1 and I'm gonna go network with someone who's worth $10 million. There's no common ground.
Yeah,
So it'll be a bad connection thing. So I've been told that very early on in my career and it stuck with me. So if you want to go buy an apartment building of 10 units, go find someone that has two 5-unit buildings.
yeah,
And within 12 months, you guys probably will be buying a 10-unit building together.
yeah,
So I think that's a great piece of advice, but you always want to figure out how to give back and make sure you're bringing those people up behind you. And like we've had people who have been LB on our deals that have come in, and then as we grew our portfolio, they've become GPs on other projects
yeah.
because of how well they work together. So that's the concept. Bring someone up directly behind you, and then make sure you're networking with people directly above you.
Yeah, it's a good way to pay it forward, but going full circle on it. Now, for
Yep.
anyone that wants to get in touch with you, what's the best way for them to find you, either online or your website?
The best place is the website, sihcapitalgroup.com. If you want a copy of my book, you can find that on Amazon, The Alternative Investment Almanac. We go over a couple of different asset classes that usually LPs come across on a daily basis.
Yeah.
But yeah, SIH Capital Group, capital with an A. Reach out anytime. I genuinely love connecting with my investors, and I'm very passionate about actually staying connected with the
Yeah.
investors.
Yeah, I love that. Well, thank you for taking time out of your day today to have a chat. And of course, for anyone that's watching, thanks for your time. If you have enjoyed this episode, make sure that you have liked this video and you subscribe below. You can also follow along with us at Inspire to Invest podcast on social. And of course, remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to the Wealth Club for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.